What a wonderful green day for the stock market today, guys. It was one of those days. Well, honestly, we've been having a lot of those days recently. Today, we had the S&P 500 close up 1.2%. Same with the Dow. The Russell went up 0.8%, and the NASDAQ, funny enough, also went up 1.2%, as the VIX went up 4.5%, and we had gold and silver. Let's see here. Gold pretty much broke even, and silver went down 0.7%. So we're going to break down the markets very quickly in this video, and of course, we're going to break down some companies' earnings that just came out: Adobe, Kroger, Oracle, a couple other stocks here. And of course, we're going to break down charts, all that good stuff. So if you all find value, hit that like button, make sure to subscribe. And of course, don't forget to get up to 17 free stocks from Moomoo, the sponsor of today's video. Each of those could be valued up to $2,000. Just go down below or go to stocksforfest.com/Moomoo. Once you open up your account and fund it with at least $100, you get 5 stocks, each up to $2,000, and you get a free share of C3AI stock, which I think today ended up going up a lot. Let me check here, guys. And that's actually exclusive to this channel. Yes, C3AI, ticker symbol AI, went up 8%, closed at $46. So with a $100 deposit, again, you get a C3AI share right off the bat, and you get 5 more stocks. And with a $1,000 deposit, you get 10 more stocks on top of those 6 stocks, totaling 16 stocks. And fund your account with at least $5,000 on top of all the stocks you just got. You also get a free share of Google or Tesla stock guaranteed. You heard that right, guys. So if you want some free money, use that link down below. And of course, it's an affiliate link. It helps out the channel. And with that being said, guys, cheers. Let's dive right into the video. So check it out. And let me take C3AI off the screen right here. Check it out, guys. Again, all these indexes ended up going up very nicely on the day, and I believe we had an ascending triangle drawn out here on SPY earlier in the day. I forget, maybe that was my first video of the day. Either way, we had that drawn out, and that ended up playing out. You guys can see I just redrew it right now, but that ended up playing out, and we ran all the way to 444 almost by, what time was that, 3 p.m.? So we had a huge run, and of course, you guys know we're at a high on the 5-day chart, 10-day chart, 20-day chart, you name it, guys. We're breaking out. And if we pull up the 4-hour chart, you guys can see here, we're now at a fresh high. In fact, we've been at one here on SPY. And to be honest, guys, are we getting a little bit overbought? I think we're getting a little bit overbought here. Maybe we do have a little bit more green, but at some point, like I've said with some other stocks, I think the overall indexes will see a bit of a sell-off, not a crash or anything crazy like that, but some sort of sell-off. I think SPY could come down maybe to 425, 430. That'd be a healthy spot. What do you guys think? And Triple Q, this went up around 1.2% on the day, and this is pretty overbought as well, as now we're at a fresh high on the 4-hour chart, on the yearly chart. You name it, guys. The tech stocks out there are crushing it, and if this were to pull back, maybe it comes down to 350, 355. That'd be a spot that I'd be looking at here on Triple Q. So those are some quick thoughts here, guys, on Triple Q, SPY, kind of what happened today. Nothing crazy, but just a quick breakdown. And what do you guys think? Let me know your thoughts in the comments down below. I appreciate all you for tuning in. As always, you guys are awesome. So let's break down some earnings, guys, the meat and potatoes of this video. Let's break down some stocks, some charts, all that good stuff. So just when you thought Adobe couldn't go up even more, guys, just when you thought it was overbought and needed a pullback, I was one of those guys. Literally yesterday, a couple of days ago too, I was like, Adobe, Netflix, these are some that are overbought. They need to pull back. Just when you thought that, well, Adobe reports earnings, guys, and look at where it's at right now. It is over 500 freaking bucks per share after the bell. It actually hit 512. Now it's at 507. And mind you, on the day we closed at where? 490, up 2.5% pretty much. And you guys can see, it's ripping after the bell. So let me show you guys here on the live news tab what ended up happening. EPS came in at 391, which beat the 379 expected, and sales also beat by a lot, guys. 4.82 billion versus 4.43 billion expected, so that's great. And they guided for full year 23 EPS of 1565 to 1575 versus the 1549 expected, so guidance is a good chunk above that estimate. That's always great. And if we look here at revenue, they see full year revenue at 19.25 to 19.35 billion. Not sure what the estimate was on that. Maybe it's right here. 19.3 billion was the estimate for full year revenue, so that came in above above the estimate. That's great. And let me see, adjusted EPS, they see full year of $3.95 to $4 versus $3.89. So in this case, guys, why the stock is moving is because of guidance. That's the bottom line here. Their guidance is very strong, and of course they beat EPS and revenue, which is always great. They crushed revenue by $400 million. Big beat there, guys. Big beat there. But really, it's the guidance. That's what's moving the stock here, as it is up around, let me see, $16 after the bell, which equates to about 3.2 to about 3.3%. Very strong earnings, guys, for Adobe, which again caused a nice move here after the bell. But I'm gonna say it again, guys, this is still overbought. Sure, it might go up to 520, 530 on this run. Who knows? Maybe it goes up even higher, but I think it's it's going to pull back. We're going to get a sizable, maybe not a sizable, but maybe a little bit of a pullback, 5-10%. Maybe we consolidate for a little bit, because like I always say, guys, on this channel, and I try and say it more when we're in these crazy green markets, right, which we are at this point, I try to say all the time, guys, that these overbought stocks, or stocks in general that are overbought, they're going to see pullbacks at some point. It's only a matter of time, right? We saw a little bit of a pullback in SoFi stock today, although these are very unrelated. Let me see what SoFi, and mind you, SoFi only went down 2% on the day, closed at 955, but earlier we got to 888, and were we not calling out a pullback on SoFi? We were, right? So Adobe, guys, it looks great. It's crushing it, but be very careful. That's all I got to say. We also had Kroger today report, ticker symbol KR. Let me pull it up. You guys can see this went down around 2.73% on the day. And when it comes to their earnings, they ended up doing $1.51 EPS, which beat the $1.46 expected, and revenue beat as well. Actually, no, revenue missed. That's my bad, guys. Revenue missed, $45.16 billion versus $45.24 billion expected. So they beat EPS slightly by 5 cents, but they missed on revenue, and they see full year 23 adjusted free cash flow of around $2.5 to $2.7 billion. And this chart, guys, to be honest, does not look good at all. It went down again 3% almost on the day. And with today's dump, guys, we put in a lower high here right under the 180 SMA. You guys see that, right? Which is not a good sign at all here for Kroger. So in my eyes, this is a falling knife. Sure, could it rally after the dust settles? That's possible. Totally possible. But right now, it's a falling knife. It went down on the day, and it's one of those stocks that I feel like could slowly start creeping down even more after these earnings. I could be wrong, but Kroger is on the naughty list, guys. It is on the naughty list right now, especially for missing on that revenue number. So what do you guys think? That's ticker symbol KR. We also had an Oracle report. This was way earlier this week, guys. We actually missed it. I forgot to talk about it here on the channel. And guess what? This is another stock that is, you guessed it, it's just overbought. I mean, look at this thing, guys. We just hit a high of $127.50 today, and this stock back in December, more like October, either way, that time period, it was at $60 freaking a share. I mean, this thing doubled up and some, over the course of the last couple of months, pretty much, for, this year in general, right? And it has seen a lot of gains since earnings, and just in the past couple of days, you guys can see back on the 8th of this month, just a week ago, it was at $105. Now we're pushing, 130. So they reported earnings on Monday, I believe. Either way, it was earlier this week, and again, I forgot to talk about them. But even, or rather, ever since they reported, this stock's been holding pretty steady. In fact, we've been making higher highs, higher lows, building on the gains from after earnings, which is a really good sign, guys. You love to see it. It's one thing for a company to report earnings and their stock shoots up 10%, but then next day it collapses, then the next day it collapses again. Trust me, I've seen that happen many, many of times. It's one thing for that to happen. It's a complete other thing here for a stock to rip up 10% and hold that gain and move steady to the upside for days to come. That's kind of what we're seeing here on Oracle. And yes, I guess it did give back the gains the day after earnings. You guys can see here, yes, it did give back the gains, but you guys can see even after that pullback, right? We held trend, and well, we ended up taking the highs out today, so it's building on the gains, is it not? It's higher now than when it was before earnings. So let's see what they did, guys. Oracle, ORCL, ended up reporting. Let's come down here a little bit. Hopefully they have it. Maybe they don't even have it here. Crap, we're not seeing it on the live news tab. But either way, I'm sure you guys saw the numbers already, and we can see here we got a lot of, it looks like price raises and, buy ratings here, some neutral ratings. But it looks like here a lot of, price raise target, raise price target. Yep, I'm seeing that all around here from Deutsche Bank, Wolf Research, a lot of these B of A securities. So that's probably fueling the fire as well. The fact that we're seeing price targets go up. So Oracle, guys, again, crushing it, no doubt. Stock's doing very well. It's doubled up and some over the course of the past couple of months. But you have to realize, like Adobe, it's overbought. I'm sorry to burst your bubble. I'm sorry to, hurt your feelings, but it's overbought. And at some point, whether it's now or maybe it runs to 140, then it happens. But at some point, we are going to get a pullback. Trust me on that. So let me see what other names we have here, guys. DraftKings, ticker symbol DKNG. This went down on the day, 1.7, almost 2% on the day. And I'm looking at it because we're finally starting to cool off, and it hasn't collapsed or anything crazy like that. But we are finally starting to come down to the 180 moving average, which is right around here on the 4-hour chart. You guys see that? Right around $23.75, $24, and that's kind of where we're heading right now. And you guys could argue we have an ascending triangle that's forming here. Do you guys see what I'm drawing out? Are you picking up what I'm putting down, right? You see that? So let's see if buyers come in, whether it's $23.75, $24, $24.50. Let's see if they come in that general area, and maybe we get some sort of rally on DraftKings. Time will tell. And of course, if it falls through $23.50, we break that 180 SMA. That would not be good for the bulls. At that point, we might start selling off. But as of now, guys, we're holding that point, and let's see if we get some sort of big rally, maybe a bounce off of that level. So that is DKNG, guys. And before we continue on, just a reminder, don't forget to get your free stocks for Moomoo, guys. Up to 17 stocks, each up to $2,000. All the details are linked down below. You have a chance of getting a free share of Google, Tesla. You get a free share of C3AI stock with at least a $100 deposit. Check out all the details, guys. And again, that link helps out the channel. I appreciate you guys as always. And let's quickly talk about the next couple of stocks here, which GameStop is on the list for today, guys. Ticker symbol GME. Let me pull it up and show you all. GameStop actually went down on the day, 3.3% in the red, down about 80, 90 cents, closed a little bit under $25 a share, which honestly is a pretty good sign considering how overbought this stock got over the past couple of days. You guys can see since they reported earnings, we've seen a crazy rebound from $20 all the way to about $28. That was a big move. We're talking 37%. So on one hand, it's good that we're pulling back. RSI is coming down. That's fantastic. But on another hand here, guys, it's like, oh, crap, we're getting rejected again at $28. That's not good, which we've covered here on the channel time and time again. That's been resistance for almost a year at this point when it comes to GameStop stock. We're talking 9 months at least, guys, based on what we're seeing here on the 4 hours. So the fact that GameStop failed at 28, not the best sign, but it is pulling back, so maybe it could be a dip buy. So yeah, take it for what you will, right, guys? So at this point, if it holds well, I mean, it is holding the 50 SMA right now, but if we get a bounce off that 50 SMA, that'd be ideal. Maybe for a retest at $28, 27, 28, and ultimately, guys, if we break 28, that'd be phenomenal. At that point, we could get a huge move, and who knows where it goes from there. Low 30s, mid 30s, maybe higher, maybe not that much. I don't know. Time will tell, guys, but that's GameStop GME right now. And another one that I want to look at, and let me see, is this the 6 stocks? So Adobe, Kroger, Oracle, DraftKings, GME. Am I losing track here? Yeah, this is the 6th stock. Yeah, JP Morgan, guys. JPM is the ticker. Look at this. We're getting deeper and deeper into this triangle on the 4-hour chart. And mind you, 145, 144, that general, little $1, $2 level, that is where we've struggled over the past couple of months. If you take a look here, you guys will notice we have failed breaking out of 145 many times, probably 10 times, maybe over 10 times at this point. And as of now, the stock closed at 143 today, up over 1%, we're now approaching the top of the triangle again. We have a golden cross. We're above the moving averages. This is looking very bullish, guys. So in my opinion, if JPM could finally freaking take out 145, we're going to get a potential push towards all-time highs. I don't think all-time highs are that far from where we are now. I could be wrong. Let me double check. 175. All right, or 173 rather. So okay, maybe not, that's let's say it'll have to run another 20% to get there. So that might take some time. It's a bank stock, guys, not freaking SoFi stock that doubles up in a month, right? But who knows? We'll see where it goes. I'm going to set my alert at 145. It's there. And if this triangle plays out, I think it's going to be a tradable stock in the short term, at least for me. What do you guys think? Let me know your thoughts in the comments as always. And if you're still here, guys, hit that like button, subscribe. I appreciate you all as always. So let me do one more before we wrap up this video. We actually had some red today. Oh, look at that, guys. Some red in a couple of these names. AMD went down 2.5% on the day, closed at around $124 a share, so now it's down around $10 almost from the highs from earlier this week. In other words, about 7.5%. Not bad, but I'm not jumping at the opportunity yet, so I'm being a little bit patient on this. I feel like it could come down a little more. If it comes down to 105, 110, that'd be a better spot, but until then, guys, I'm sitting on my hands here on AMD, being very patient. You might be asking yourself, did Nvidia go down? Well, it went down slightly, I believe, at least last I checked. Yeah, 1%, actually 0.8% to be exact. And guys, this is far from being oversold or anywhere near being oversold or a stock that I'm looking at to buy the dip, because we just hit a high literally yesterday, was it, right? Let me pull this up and see. Yeah, that was yesterday after the bell. We hit 433. So Nvidia, guys, you know this. I've been saying this for a while. I'm not FOMOing into it, even if it means I miss out of some gains here in the short term. If it goes from 430, which it closed at today, maybe it goes to 500. All right, I missed it. But at some point, it's going to come down, at least in my opinion. This is not sustainable. You have to realize this, guys. This is not sustainable. The stock was at 108 back in October. Now it's at 400. I'm not saying it's going to go back to 108. All I'm saying is it could come down maybe to 325, maybe 350. Be mindful of that. I'm not saying for sure it'll happen, but be mindful of that. So with that being said, guys, I'm going to wrap up the video. If you enjoyed it, smash that like button. Feel free to subscribe. And don't forget to get up to 17 stocks for Moomoo. Link down below. Once you open up your account and fund it with at least $100, you get a free share of C3AI stock right off the bat. And on top of that, you get 5 more stocks, each up to $2,000. And again, that's just with a $100 deposit. And listen to this. If you fund your account with at least $1,000, guys, you get 10 more stocks on top of those 6 stocks that you just got with the $100 deposit, totaling 16 free stocks. And it gets even better. Fund your account with at least $5,000, guys, on top of those 16 stocks. Are you ready for this? This is the best. This is the icing on the cake right here, guys. You get another free share of either Tesla or Google stock, guaranteed, guys, guaranteed. So use that link down below or go to stocksurfest.com/Moomoo. Get your free money. And of course, that is an affiliate link. It helps out the channel. I appreciate you guys as always. And with that being said, cheers. I'll catch you all later.